Okay, we're going to count to 100, moving on to objective 1.5, which is constructing financial statements, analyzing relationships among them, which in part we've already done. But let's walk through creating a statement with some actual numbers. This is once again, this is going to be a skill that you need to carry with you throughout the entire course. All right, so we're going to start with the income statement. Always the income statement first. And we have our title, our name of the corporation. Our title of the statement is income statement for year ended December 31, 2005. By the way, um, does it always have to be calendar year and fiscal year? So fiscal year, it does not. Fiscal year does not always 12/31 year end. Okay. For example, retail companies that look at Christmas, they have a January year end. Some companies have year ends on June 30. That's June 30 is the second most popular. But you can have a fiscal year end uh, set at any time. And once you set it, you stick with it. But there are companies that have their fiscal year ends every month of the year. Um, okay. So fiscal year, by the way, fiscal year is a financial year. So we have the title properly done here, and if we look at the information, it tells us 20,000 in revenue, 18,000 expenses. So that's $2,000 in net income. Had it been a net loss, I would have put it in parentheses. Go to the statement of retained earnings, the corporate name, the name of the statement, and then because it's a flow, we, the statement associated with the flow measure, put for year ended. Okay, now we were told, hopefully we were told, they began the year with 5,000 in retained earnings. And that's where this number comes from. And we have the net income, so we're going to put it here. We have no net loss. So we're going to add net income. Let's see what they say about dividends. $1,000 in dividends. And that's going to be less dividends. So 5,000 plus 2,000 is 7,000. Less 1,000 is 6,000. So retained earnings increased $1,000. So now we're going to take this to the balance sheet. And this is the relationship among the financial statements. So we come down here. We have 6,000 in retained earnings. Let's see what else we have. We have up above, it told us we had 10,000 in cash, 7,000 in other current assets, 5,000 property, plant, and equipment. So total assets are going to be 22,000. All right, now I know that this has got to be 22,000. If not, something's wrong. So 2,000 in accounts payable. No other current liabilities. So the total, when you see one of these lines, it means total everything above. 2,000 plus 5,000, total liabilities of 7,000. 9,000 plus 6,000 is 15,000. And we take these two, add them together, and you get 22,000 just as a check. All right. So the balance sheet balance, dogs and cats sleeping together, everybody's happy. And that's basic. That is how you create an income statement, statement of retained earnings, and a balance sheet. We're going to be moving on in the next video to a little discussion of ethics.